Hi, thanks so much for joining in. You're watching Your Money Matters on NDTV Profit, and my name is Alex Matthew. As the name suggests, this show gets you everything that you need to know, actionable insight into how to manage your money better. And today I'd like to talk to you first about health insurance. This is something that a lot of people say you should buy before you even make a first investment. But what is the kind of cover that you should get? And how should you construct that cover? Because you can, for example, take a full base cover of 1 crore rupees, or you can take a certain amount of a cover as a base cover, and then you can do a super top-up. It's much cheaper to do the latter, but there are drawbacks to that approach as well. Joining me to talk about what the ideal approach should be is Nikhil Jha, the co-founder of Hercules Advisors. Nikhil, you had a very interesting working that you shared on social media, and which is why I wanted to talk to you about this. And you took about a 30-year, and this is a hypothetical scenario, a 30-year-old with a 10 lakh base cover and a 90 lakh super top-up and a 1 crore base policy. The difference is quite considerable. In fact, you would pay double the premium in the second scenario. Why is there such a big difference?
So when we consider a super top-up plus base policy, so that will be quite cheaper as compared to a total full base policy. So let's take an example. If you are taking a 10 plus 90 super top-up plus base policy, it will cost you near about 15,000. Similarly, if you take a 1 crore base policy, that will cost you near about 30,000. So why it's so? So in super top-up policy, it has own limitations on room rent. You cannot claim more than single private room. There will be sublimits on cancer treatment, like you cannot claim more than 3 lakhs, 5 lakhs or whatever. So it varies from one policy to another. Third and main important thing in the super top-up policies are non-consumable items are not covered in the super top-up policy. So that is the main reason why super top-up policies are cheap. So if you are looking for a policy with a good coverage, we'll definitely advise you to go for a higher coverage of base, not for the base plus super top-up. But yes, if you are looking for a cheaper policies that will build you a corpus of 1 crore at an early stage with low premium, then you can look for the super top-up policies. But remember, super top-up policies are very good while paying the premium, but while getting any type of claims, it will quite complicate you because you have to run 2 policies, you have to survive 2 waiting periods, everything. So it is always better to run a single base policy of good sum insured value like 25 or 50 lakhs. That will be very good for you.
Okay, I want to get into the details of some of these issues that you've highlighted in the limitations that you've pointed out for a super top-up, because I think a lot of people go out and do the first scenario where you take a limited base policy, especially because they also depend on their corporate policies, right, Nikhil? Because you have 5 lakhs to 7 lakhs to 10 lakhs in corporate policies on an average. So they say, okay, I have that. And beyond that, I will take then the next safety net is my base policy, which they'll take as 5 or 10 lakh rupees. And then they'll add to that maybe a 30 or a 40 lakhs or a 50 lakhs. In your case, you've talked all of the way about a 90 lakh super top-up. But what are the limitations that you've pointed out on a super top-up, and why do they exist?
Yeah. So let's take an example of claim. Then we can clearly understand how it works.
Yeah.
So let's take an example. We have taken a 10 lakh plus 90 lakh super top-up policy, and your single bill comes to 30 lakhs. Okay. So on that scenario, how it works? So first 10 lakhs from base policy, you will get full amount. The remaining 20 lakhs, there will be sublimits on room. You cannot claim more than single private room. Second, there will be sublimits on whatever the treatment that you have taken, like robotic surgery will not be covered, or immunotherapy will be not covered. Many treatment related to cancer will not be covered on the super top-up policies. That is the second thing. Third,
is that always the case, Nikhil? Is that always the case? Or
99% of the super top-up policy hold this type of scenarios, this type of sublimits in the policy.
But why is that? Because ultimately, yes, this is an avenue for the health insurance company to offer you a product at a lower premium. But then if I'm doing this, I might as well get a slightly better option, right? Because even in the super top-up, there should be an avenue like there is in other insurance products, Nikhil, to build on certain things over that, right? So you have riders that you can associate with that, and you can perhaps pay a higher premium. Does that not exist for super top-ups?
So in one of the newest policy for super top-up in the market is from ICICI. On that policy, the limitations are less. but still have to conclude what are the terms and conditions to be fulfilled. That policy have certain riders to carry out the room modifier option, that you can claim more than single private room, or the consumable items are also covered, but yet to get all the good pictures about the claim part. So there are still policies available in the market with full claim settlement guarantee, with all the claim protector riders, all the consumable riders are available, room modifier riders are available in the super top up policy, but still to get a clear picture on claims part, because never seen a super top up claim and getting full settled. So have to look onto particular scenario while taking any type of claims. So we have to wait.
When you mention no restoration lost benefit, what does that mean?
So restoration means, let's take an example, Alex. If you have taken a 10 lakh policy in the month of November, so this policy will be valid till next November, right?
Yeah.
So if you have taken a claim of 8 lakhs in the month of January, so on that scenario, what will happen from January till next November, you are left with only 2 lakh rupees.
Correct.
Right? Because of restoration, when in base policy, restoration is there. So again, if you get hospitalized in the month of March or April, again you will get 10 lakhs more. Whereas in super top up policy, it doesn't have.
Okay, so it gets exhausted.
Exhausted, right.
And super top up is generally associated with, does not necessarily have to be associated with one person, right? So for example, in a hypothetical scenario, Nikhil, I can say that I am taking a base policy of 10 lakh rupees, my wife is taking a base policy of 10 lakh rupees, and jointly we are taking a super top up of 90 lakh rupees. Is that how it works?
Yeah, it is how it works. So even one person has taken a claim, it will be counted as a deductible part. So there is a deductible that we have to survive. So if you have taken a 10 lakh deductible and between two, any of the member has been taken that deductible out, means whatever the claim amount will be like there will 10 lakhs. So if you have taken 10 lakhs from your corporate policy or from the base policy that you are holding, another member can use the sum insured from the top-up policies.
Okay, that's important. And when you say no claim bonus, no claim bonus is not applicable on super top-up?
Right. So what is meant by no claim bonus? When you don't take any claim. So most of the policies in the insurance industry right now, if you are taking a 25 lakh policy, next year it will be 50, then after 75 lakhs, then after 1 year, so every year 25 will be added into your policy. Okay. Whereas if you are taking a super top-up policy and you are taking a 90 lakhs top-up, there will be no claim bonus. So that 90 lakh will remain same.
Okay, but that isn't the case for a what is the calculation for a base policy not super top up no claim bonus for a base policy? If for example if I've got a 10 lakh policy, base policy, and I have not made any claims, it's possible that my premium goes up. Will my premium go down, or will my coverage go up? How does that work?
Your coverage will always go up. Okay. There will be no decrease in premium in any of the policies. Okay. There are 2-3 policies available in the market where if you have not taken a claim for next 5 years, like if we talk about the care super care. So on that policy, what happened? If you have not taken the claim for next 5 years, on that scenario, your first year premium will be reversed back to you. Okay. But that is not so great in terms of if I can advise you to get that policy, because if you have not taking any type of claims for next 5 years, it will be like you are not getting any idea how the policy is going to be worked out.
Yeah, you don't have an idea about the coverage. You don't have an idea about claim settlement, about the process. So if you were to rank, Nikhil, and we'll come to the advice that you have for my viewers about the ideal way to go about doing this. But if you were to rank policies and you were to say that you need to look at these 4 or 5 metrics in order of priority, what would they be?
So there will be 5 things that I always want all my followers to get into that, all your viewers as well. So first one will be, in your policy there should no room rent capping on your policy. So you are eligible to any room you want while taking any type of hospitalization, because you never know what type of room is available in the hospital or not while taking any type of hospitalization, right? So your policy should not have limit on your room. That is the first thing. Second, there should not be a co-payment in the policy. What is meant by co-payment? Co-payment means between it will be a part payment between you and the insurer company. Okay, so if you are taking a 10 lakh rupees claim, most of the co-payment option will be 20%. So what is meant by that? 8 lakh will be settled by company, remaining 2 lakh you have to pay from your pocket. So in your policy, there should not be a co-payment in your policy. Everything should be settled by company. You don't have to pay a single penny from your pocket. That is the second thing. Third one, there should not be any sublimits on any type of diseases. What is meant by sublimits? it means on particular days there should not be a limit of 1 lakh rupees or 2 lakh rupees or 5 lakh rupees. So if you are taking any type of claims, you can claim up to the sum insured whatever you are holding right now. Okay. So that is the third. Fourth one will be consumable items should be covered in your policy. What is my consumable items? So in all the policies across industry, there are certain things which are not going to be covered. What are those? That are gloves, cotton, mask, syringe, all that stuff. So it will cost you near about 10-15% of your entire bill. So in your policy, this consumable rider should be there. Then only your claim will be 100% payable by the company. Or else you have to pay 10-15% out of your pocket. Okay. Fifth and last main important part will be no claim bonus. Your policy should be having good no claim bonus. Why it's so? So if you are taking a 25 lakh policy, as per current scenario, 25 is good enough policy. Okay. But down the line of 10 years, Alex, this will be nothing because of considering the medical inflation of 10 to 14%. Right? So if your no claim bonus is 100% every year and it goes max up to 10 times or 20 times or whatever, so down the line of 10 years, it will be 2.5 CR.
Yes.
Okay. So considering the medical inflation also down the line of 10 years, this 2.5 CR ka value will be near about 1.25 CR, right?
Yeah.
So at that point also you will be having good coverage.
Sure. So I have a follow-up on that last bit and then the piece of advice that you might have, Nikhil, which is that assume that I've had a no-claim bonus for 3 or 4 years in a row and my coverage therefore has gone up, my cover has gone up. If I make a claim in the 4th or the 5th year, does it reset back to the first value or does it reset or does it not increase from the 4th year value?
Yeah, so there are certain policies, sir, where even if you claim or don't, your sum insured is going to be doubled. But whereas there are certain policies in which if you are going to claim, that particular amount will be reduced from your policy and rest will be carried forward as it is.
Understood. And most of the time it is a latter?
Yeah, it is a latter.
Most of the time.
Most of the policies.
And therefore, just to go back to the first point that you were making, if you are 30 to 35 right now, you probably get a good rate on your insurance policy. Should you go out and get a pretty hefty amount in your base policy and then down the line you bolster that with a super top-up? Is that the way to do it?
No. So what my honest advice will be there, if a person with age group between 20 to 35, the premium will be less as compared to 45 to 60.
Sure.
So what my honest advice will be there, for them, the minimum sum insured should be 25 lakhs.
Okay.
That will be the adequate cover I'm looking at. No base plus super top up, nothing.
Just base.
When you are crossing, sorry?
Just base 25 lakh.
Just base 25 lakhs.
Okay.
But when you are comparing the age group between 45 to 65, where the premiums are quite on higher side, on that scenario, I can definitely ask you to take a base plus super top up policy if your financials are not good.
Understood.
But if your financials are good, then go for the base 25 itself.
Fantastic. Okay. So I'm glad that you've joined me today, Nikhil, and this is an important conversation to have. And thanks so much for those 5 points that everybody should pay attention to when they're going out to get a health insurance policy.
Right.
All right, now that was on the health insurance side, and remember what I said, a lot of advisors will tell you to go out and get a health insurance cover before you even go and make your first investment. Try and do that, particularly when you're younger, because it's much cheaper to get your premium and your policy.